Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everybody, my name is Rob Clayton and thank you very much for joining me. Well, to begin with, the price action for the Australian dollar wasn't as impressive overnight. After Friday's very strong surge, the market didn't make any significant moves. And although the bulls did put a brief challenge to all that topside resistance at 78.4560 after printing a high of 78.38, the market has now declined and struggling to find any momentum from what I can see at present. Now, a break beneath 77.65 would give further scope to the downside and negate any bullish implications and look towards 76.85 to 76.35 and reassess from there. Today we have the RBA's release to its monetary policy meeting minutes for June. So do be a little bit cautious on trading due to the fact is it could put a positive or negative spin from the release and could see the market trade in a whipsaw price action and see which one can gather the further interest. As I mentioned, the break of 77.65 does give further downside potential, but a break above 78.60 would negate, or should I say, give me a neutral view and could look up towards 79 to 80 as 80 cents as a potential target. So do be a little bit cautious because it would probably trigger a lot of short covering if we get above 78.60. Well, with the US dollar remaining weak, the resistance is still under threat at 114.85 in the euro. Now trading at 82.83, we could see a break at this level purely for the fact is that the US dollar remains to a 10-month low. After Friday's weakness printed on the index a low of 94.84, its lowest trough since September 2016. Now, as I mentioned, a break of 85, which is right on the cuff now, is that we could see an impulse up towards these highs above that 115 to 116 level. But as you can see, over 3 attempts, the market only sustained no more than a week. So we could see further rejection again from that level if challenged. Now, what would get the bears to increase in numbers is a break of 113.65. If we see a move beneath there, that would give further scope to the downside and bring in a target of 112. Around this level of about 112.40-45, but we still need to see a break at that 113.65 level to get the momentum going for the downside. Well, dollar yen was a little bit quiet yesterday, purely for the fact is from its absence of its holiday, which was in the observance of the Marine Day. Still keeps the market on its toes now as we look towards this support of 111.80.10. With the technical implications still negative, we could see this level break and look down towards 111.10.25 and reassess from there. Towards the upside, resistance is now seen as a cap for this week of 112.95 to 113.20. For the pound, reverses overnight from 131.12 high to a low of 130.46. In light of the pattern, we do need to see further weakness to get the market looking lower towards the 128 region, and that will be from a break of 129.80. With my view at the moment still neutral due to the fact that we did clear 130.30.45 on Friday, is the fact that we could see further tests to the upside. However, as I mentioned, if we get a break of 129.80, then that would give further indication to the downside. Well, it would seem that the gold has broken higher, now clearing this trend line of 1,232, and the threshold of the 0 on the MACD does support a target now of 1238 and even higher up towards the region of 1245. With the scenario of the bullish move, I would look to buy on dips, and that's towards 1227 to 1224 and reassess from there. If we get any rallies, I do expect to see the market unwind towards 45. So this is only a very short-term view, so do keep your levels in place accordingly. And to wrap up with oil, well, the market failed at that 46.80.85 level yesterday and now looks back towards the support of 45.50. My main view has been very concerning the fact that the longer term picture for oil is negative, and we could see further implications to the downside if we see a move through 45.5 and look back towards 43.60. Any advances may still fail towards 46.80, but if it clears that level, then we could see a short impulse up, which should give opportunity for a bear to start shorting the market from 47.5 to 48.5. So that wraps up my daily video. Thank you very much for joining me. And as always, look out for the intraday report today, and I hope you have a wonderful day ahead also.